The big focus right now, the International Energy Agency is seeking an ambitious agenda from the G20 on clean energy investment at the ongoing meetings under India's presidency. As per IEA's estimate, the global market for clean energy technology manufacturing would be almost $800 billion by 2030. The agency also believes that a new global clean energy economy will open new opportunities for developing countries, and solutions like India's lifestyle for environment or life will have a key role to play. Meanwhile, Saudi Arabia has plunged further cuts in oil output in July by 1 million barrels per day, besides an extension of supply cuts by OPEC and allies into 2024. However, due to weak demand in China and excessive supply from sanctioned countries, including Russia, Goldman Sachs has cut its forecast for oil prices by nearly 10%. To discuss the outlook for crude prices going forward and also the International Energy Agency's outlook on energy transition and India's role to play there, we're joined by Fatih Birol, Executive Director of the IEA. Mr. Birol, thank you very much for joining us. Today you conveyed to the G20 that we need an ambitious agenda when it comes to clean energy investment. What is the kind of clean energy investment the world needs and developing economies especially need?
So, clean energy investments are growing very, very strongly. Just to give you an example, this year, the entire investment in energy sector, everything put together, is 2.7 trillion US dollars, 2.7. Out of this 2.7, 1 trillion goes to fossil fuels, oil, gas, and coal, and $1.7 trillion, significantly more than fossil fuels, goes to clean energy. To make it maybe a bit more my point, this year, for the first time in the history, the amount of investment going to solar energy is higher than amount of investment going to oil production, to make you understand how strong the clean energy investments are going. But this doesn't mean that we will not need oil and gas tomorrow. We still need them for years to come. But the main message is clean energy is coming, and coming much faster than many people realize.
Right. Mr. Birol, what has been your conversation, focus of your work with the Indian government, and what can be done as far as the G20 presidency under India goes?
So, first of all, I mentioned to you that the $1.7 trillion went to clean energy investment, but big chunk of it comes from the rich countries and China. Other emerging countries, they do not have enough financial resources in order to mobilize solar, wind, electric cars, hydrogen, and others. So there is one task for India, in my view, should be convince the rich countries, advanced economies, and the international financial institutions, such as World Bank, in order to facilitate the clean energy investment in developing countries. This is number one. And number two, it is also very important. Only a few months ago, Prime Minister Modi in Bengaluru asked me if the world, he said, would adopt the life initiative of India globally, what will be the effects of that? I have shared in Varanasi, in fact, yesterday, to the development ministers' meeting, the preliminary results. It shows that if the life adopts if the world adopts the life mission practices, we can reach our climate goals much faster and in a much more economic way. So the second job, in my view, for India would be to make sure that the G20 countries and beyond take measures in line with the life initiative of Prime Minister Modi. So I would suggest these two important topics for India's G20 presidency.
Right. I would also like to ask you about the oil markets. Saudi Arabia last week and even OPEC said that they want to combat uncertainties and the sentiment in the oil market. The Saudis last week announced a unilateral cut of 1 million barrels a day for the month of July. How do you see this impacting oil prices going forward, Mr. Birol?
Yeah, when we look at the first demand side, demand is still going to be very strong. We are still seeing the rebound from the COVID crisis, especially driven by China. Our expectation is this year, global oil demand will increase about 2 million barrels per day, maybe even slightly higher, and 60% of this global oil demand will come from China only. So strong, robust oil demand growth, mainly driven by China coming out of COVID. When we look at the production side, the supply side, we know that some countries, such as the US, will put significant amount of oil in the market, but key oil producers cutting off the production may well mean that the second half of this year, we may see upward pressure on the international oil prices, which may be not a good news for the countries who are importing significant amount of oil, especially those in the emerging world.
So you are expecting an upward pressure on oil prices in the second half of the year, Mr. Birol?
Yes, if we don't get some surprises in terms of the economic growth of China, or if we don't see major economic headwinds in the rest of the world, in a normal economic environment, we see a strong demand growth coming out of COVID, and the supply cuts may well mean that we have the possibilities of seeing upward pressure on the international oil prices.
Right. I would also like to ask you about your outlook for oil and gas prices, oil and gas markets for 2023. How do you think this year would be, and the factors that could determine it? We're also seeing a Goldman Sachs report which has said that Brent crude will likely cost $86 a barrel in December compared to the previous estimate of $95 a barrel.
So both for oil and gas, there are many uncertainties, but one big uncertainty is China. How the Chinese economy will perform. Is it going to perform below 5% or significantly higher than 5%? It will affect both oil and gas markets. If it is very strong growth, much stronger than 5%, we may see, again, as I said, even stronger upward pressure on the prices. If it is, however, much weaker than 5%, these price pressures will ease. On the natural gas market and the LNG imports, again the same situation. China is the largest LNG importer of the world, and last year we have seen Chinese imports, LNG imports went down, but if the Chinese economy rebounds strongly, this will put, again, upward pressure on the LNG prices. On the oil side, there is another uncertainty, of course. It is the production policies of the major oil producers. This will also affect the oil market. So these are the two big uncertainties: China's economic performance and also major producing countries' production and export policies.
All right, Mr. Birol, thank you very much for joining us, telling us about your conversations with G20 leaders, with the Indian Prime Minister, on what should be the priorities going forward, not just for G20, but also COP28. Thanks once again for being with us here on CNBC-TV18.